I hope you all are doing well, enjoying the material so far and applying into on the charts. Okay, so today we're going to talk about the next topic about the types of order flow and the two trades that I took on the pound USD. So we'll have little breakdown of the two trades that I took this week. They didn't perform, but despite of they didn't perform to the expectation, but still we got some profit from it. So I will break down those things, why I entered those trades, and we'll take it from there. Okay, right. So first thing first. Okay, this is the second phase where we're starting here, right? So the little bit advanced. We talked about in the last topic what is an order flow. If you don't know what is an order flow, I think I highly suggest go back to my previous video and watch it and then come back here. Otherwise it will not make sense. And anyway, so if you are liking this content, okay, so far, so I would really appreciate if you subscribe, like, and hit that, the bell icon. That will help me to keep this channel on. And then, so what is an order flow? Okay, in a nutshell, order flow is nothing but a mitigations of institutional pending order before the big move, right? So that's in a nutshell. Okay, let's talk about the types of order flow. So healthy order flow. What is unhealthy order flow? So when we see like, okay, price is, let's say, is reaching your POI here, point of interest, okay, and you see something like this, okay, one break of structure, mitigation, break of structure, mitigation, break of structure. So these mitigations, like, so in terms of healthy order flow, there should not be too many mitigations. So typically there will be 2 or maximum 3 mitigation before the full release. So it is full release, so couple of mitigation and then impulsive move down. So this is what we call it as healthy order flow. Okay, so 1, 2, 3 mitigations and then full release. Okay, I will tell you the example as well on the chart, but this is how it looks like. Okay, the healthy order flow. If there are too many mitigations, that's not an healthy order flow. That's called unhealthy order flow. For example, here, so the price is reaching a point of interest here and reacting from that point of interest. Then, like, let's say one break of structure, mitigation, break of structure, mitigation. There are too many mitigations. So eventually, what's going to happen? It is building up the liquidity over here, and something like this will happen, like boom. So just to keep an aware, okay, so if you are trying to trade a reversal based on the higher time frame POI, because we eventually are trading a reversal, right? So higher time frame POI, and we are trying to enter on the lower time frame, right? So now, if you see too much mitigations are going on before big impulse, so you need to be aware of, okay, this might be a trap or a flag kind of stuff, and it will eventually go in opposite direction that you wanted to take on. Okay, so this is called unhealthy order flow. So the typical example of, let's say first example, okay, here, okay, yeah, so this if you see one break of structure, where is break of structure coming from? Here, this is an order block, it's mitigated here, new break of structure. Mitigation should cause new break of structure, otherwise it's not mitigation. Okay, so keep that in mind. So it's mitigated and new break of structure. Again, this is the last mitigation point. It come back here before full release. You see the difference, this leg, and see this leg. So this is how you call it as you will identify what is healthy and unhealthy order flow. This is on the 4-hour time frame, but when you enter on the 1 minute or 5 minute, it should be in your back of mind. So what's going on? Okay, for example, let's say here, okay, this is another example, healthy order flow. Okay, so this is our point of interest. We see, okay, now this is our last low high, which caused first break of structure. Where it is coming from? This is an order block. So mitigation, again break of structure, mitigation, then full release. You see that what I mean? Yeah. So this is unhealthy order flow, right? In terms of unhealthy order flow example, here is one I found it: Australian dollar and US dollar. It's on 10-minute. Okay, you can use any time frame. So this was for a buy, and it's reacting from some POI here. Okay, so we got one BOS. It's mitigating some inefficiency here, not order block. Okay, and then it causes new break of structure. Again, mitigating the order block, and this mitigation leads to new break of structure here. So if you see here, mitigation, it's too much mitigation. So what's going to happen? So it's build up already liquidity over here. It looks like a pullback to go down rather than up, and this is what exactly happened. See, so that's how you call it as identify as a unhealthy order flow. Okay, so why it is order flow is important, right? Why it is important to mark these mitigations and order flow, because if you know the point of mitigation, you will know the point of invalidation. So this bias, let's say we're trying to buy right, for this will be invalidated after this mitigation point is violated. Okay, so there is a break of structure violation and point of mitigation violation. So mitigation always take a higher weightage in terms of order flow. Okay, because it is using as order flow to continue. Okay, rather than the break of structure. But okay, so just keep that in mind. So when you mark the break of structure, I will highly suggest you mark as a last mitigation where it happened. So price may come back there before it going to the new break of structure. Okay, I will cover in the next video what is an invalidation point. But for now, I think you should use this. This is very important. Okay, to identify what type of order flow you are in, and so yeah. Now, so let's talk about today's this week's 2 trades that I took, but both of them are failed. Okay, they didn't perform doesn't mean we haven't took any profit. Okay, so this is what we sent for. This is the 2 point of interest based on this order block, daily order block I sent on the weekly outlook video. Okay, so I was looking for this. Let's go for the first. Okay, how I entered and how you should also enter. Okay, so when price entered my point of interest. Okay, so I went to 1 minute. Okay, and I was observing the price here to see our entry criteria. If you don't know what is our entry criteria, go back to our entry criteria video and conservative entry model. So I do not, if you are taking a risk entry, you just put 50% of this POI limit order here, stops above this, and then okay. But I don't do like that. Okay, I always like to confirm where it is coming from. So now, so what we see here, we see one big impulse, and we want to see our entry criteria, which is okay. So this is where I see the first break of structure, and where it is coming from, it's coming from here. Yeah, that's an order block. So I want to see again one more breakup structure mitigating that order block. Okay, and this is what exactly happened. So now we know, okay, we are bearish now. So order flow is transition from bullish to bearish. Order flow is fractured here because we are bullish at this point. Okay, and the order flow, this broke that bullish order flow, and this again new breakup structure is confirmed that order flow is bullish. Okay, so and what was our order block? Order block is this one. Okay, and this is also the point of mitigation, last mitigation. So what we're gonna do, we're gonna put an order here on the 50% price above this order block, which is also the point of invalidation, and we're gonna go down. Okay, we're gonna take the entry from there. Okay, so it is triggered perfectly here, and as soon as it reaches 10 hour, okay, here I removed 50% of the money. Okay, 10 hour is here, and then I removed a 50%, and my stops were moved to the break even. And later on in the day, it come back and hit me break even. So even though the trade didn't perform, not every trade you will get 1 to 50, 1 to 100. Okay, but even though the trade didn't perform, you are following the rules of the entries and the order flow, and the trade is perfectly valid. You can take this kind of trade. Okay, so this is the first one which also didn't perform. Actually, it's a little bit disappointing. I was aiming way big low here, but it didn't perform. Okay, so then it came up and violated that POI, right? So yeah, so now it came to the next point of interest here, I think yesterday, and then we again do the same thing. Okay, we go here on 1 minute or 5 minutes and monitor our order flow transition from bullish to bearish. Now here what happened is that POI got violated, but POI is only violated if we break that structure on the time frame where we mark that POI. So we were marked on the POI on the 4 hour. So 4 hour candle has to break about close above this, then only we can say, okay, we are no longer interested, right? Other than that, this is on the lower time frame, it's just a wick on the higher time frame. Okay, so when I see this order flow transition here, if you see here, we got one break structure. We want to see one more here. Okay, so we found that we got that second BOS as well. So here the order flow transition confirmed from bullish to bearish, and we can mark an order block. This is an order block, and we can take entry from there, right? So if you put an entry here, open or 50%, whatever you like. Okay, and then go from there. Okay, so you see here the entry got triggered. So the mitigation of the previous order, then again there is mitigation and full release. So we removed here 5 hour as well, but it also came back hard today, and it broke that POI today. So we will re-evaluate the POI again next week for outlook, and we'll see. So you need to understand here, not every trade will give you 150 or something. Okay, so but even though it didn't give that the big move, but still you can make capitalize from the move that you got based on the what you learned so far. Okay, other than that, I think see you again. So yeah, take care, bye.